Mr. Ashwani Bhatia, Managing Director and CEO with SBI Mutual Fund, and the reason why we've invited him on the show is because State Bank of India has now become India's largest AMC. 10 years ago, the total assets which were managed by State Bank of India were less than $10 billion. Mr. Bhatia, less than $10 billion 10 years ago, where does the number stand now?
Well, if you just talk about the mutual fund assets alone, we'll be touching around 4 lakh crores. So that's about $57 billion. But as a fund house, today we manage funds in excess of 10 lakh crores. And that includes, the bigger chunk is of course of the PMS, which is also, we manage funds for the EPFO, for the pension funds of the coal miners, the ESI, State Bank of India, so on and so forth. So as a fund house, we are currently excess of 10 lakh crores. The mutual funds are close to around 3.9 lakh crores today.
Every sector, Mr. Bhatia, PSUs have lost market share. AMC industry must be the only industry where a PSU franchise has managed to gain market share and become number one. Why, how, and will you stay the number one AMC in India for next couple of years?
So finally, being number one or number two is a number finally. We do think that going forward, we provide the right product for the customer, and over the last few years we have been focused on the customers only. The other thing, of course, I'd like to mention is our focus rigorously on SLR, which is on safety, liquidity and return, and in that order. Besides SLR, I think the customers should also think about CRR, consider risk and return. So I think we've been very lucky. We have a wonderful investment team led by Navneet Munot. Today, our investment team is the largest in the industry. We've also been doing a lot of innovation, whether it is on ESG, whether it is on PIMS, whether it is on so many other things. We are the first to adhere to the CFA code, on the sustainability development goals, on UNPRI, so on and so forth. So I think all of these things have kept us in good stead. Of course, our parents are respectively number one in their geographies. So State Bank of India is the largest bank in the country. We are happy to join them as the largest mutual fund in the country. Our partners, Amundi, are also the largest in Europe. So it's great to have such parentage with us.
Where do you think the structure or the commission structures in the mutual fund industry are headed? One side you have ETF, which has become very large, which is a low commission based structure, one. B, at a time when SEBI has constantly been indicating that the rates for PMS and other mutual funds will come down, the fees which you charge. Are we looking at a scenario where the size of the mutual fund industry will continue to grow, but the commissions and the spreads will continue to come down? Because SEBI has acted last year, and now the size has increased after that. So maybe this year or next year they will come and say, economies of scales have kicked in. Mutual funds, they need to bring rates down more.
I think that is the trend, not only in India, but the trend globally. So as the fund size grows, and given the structure that SEBI has put up last year, it's very, very natural that the overall fee structure is also going to come down for specific funds as the size grows. But I guess you need not worry too much over there, because the industry is growing very fast. So over the last 5 years, if the deposits have grown by about 9% or so, the mutual funds have grown by about 20%. So very rightly, Nikunj, as you said, economies of scale will come in, and the commissions overall will also come down, which is good for the customer. But with the economies of scale, I mean, given that we are a pass-through instrument, our profitability should not be impacted to that extent.
Yeah, there's been such a strong move with regards to SIPs, and we continue to see more and more investors, biting in there. Do you see that trend continuing? Is it a function of volatility in the markets, or do you actually see this as a trend that will continue?
I think it's a trend. So I come from the state bank background. When we used to be in the branches, we used to tell our customers that, look, the best way to save is to open a recurring deposit account. Now with whatever AMFI has done and what SEBI is trying to promote, mutual fund sahi hai, I think an introductory product like a SIP in place of a recurring deposit, I think has rung a bell. And given the trends, notwithstanding the volatility, I think the SIP book should be growing over the next few years. And I say this because I firmly believe that the financialization of savings is going to move ahead. So over the last 5 years, from about 46%, I think, it's moved to close to 52% currently. So as we go ahead, I think investors, as we again become a 5 trillion economy, maybe over the next 10 years we become a 10 trillion economy. As the income goes up, as the per capita goes up, this piece will also keep on increasing over the years.
There is a silent, polite, and obvious criticism which is coming against active fund managers, not just SBI but everyone, that fund managers are struggling to beat their benchmarks. Debt fund managers have not given great returns in last 3 years. How would you defend it?
So, I mean, market does go through phases. This could be one phase, of course. Our markets are no different from global markets, and we do know that over the last 1.5 years, the rally has been led by a few stocks. It has been a very concentrated rally at the same time. But again, these are phases. I don't think that the active fund manager's role is not there. It's very, very much there. And some of them, of course, have beaten the index. We also have such funds in our portfolio. So going forward, I don't think that will be the case. But, given the fact that today organizations like the EPFO and a lot of pension funds do that, there's more discussion in that area. But I don't think the era of active fund management has gone anywhere.
Mr. Bhatia, most of SBI subsidiaries have now gone public. You're profitable, and we're watching out for the SBI Cards IPO, of course, post which any chances that you will be looking at going public as well?
Well, we have been asked that question again and again. Of course, subject to approvals from our parents, both SBI and Amundi, we will be looking at that option in the next maybe 15 to 18 months.
We're all very curious to know how, being a PSU, you actually managed to attract such strong talent. What's the kind of secret there, if I may call it that, but how do you manage to do it?
So I think let's give SBI some credit, in fact, a very large part of the credit. Our teams are great in SBI Mutual Fund. So I pride with the fact that, the teams here are absolutely stable. They have a very good vintage, and we provide an atmosphere for growth. And anyone who's been here with us for the last 10 to 15 years actually tells me that every day that, you know, this journey has been great. And if you're talking about the ecosystem, I think SBI ecosystem does provide for that benefit to all that work over here. So whether it is cards or whether it is life or general insurance, I've also worked with SBI Capital Markets. The management and all, it's excellent. We do provide a lot of opportunities to all our employees. This is a great place to work in and be at.
Fabulous, Mr. Bhatia. We'll leave it there. Great speaking with you this morning. Thanks so much for joining us on ET Now.
Thank you very much.